Earlier this year, or actually in September, the Governor's Board put out a research paper trying to quantify trade uncertainty. And it suggested that it could drag through the business investment channel on growth as much as a percentage point over the course of the next year. How much confidence do you have in the Fed's ability to estimate the real effects of trade uncertainty? And if you have confidence in that paper, it would seem to suggest a sort of a more aggressively dovish path than the one that you've chosen.
Yeah, so I think to provide a little context, Fed economists do research all the time. It's generally a very high quality. It's their research. It's not an official finding of the Federal Reserve Board or the Federal Reserve System. It's just, by the way, they put it out for public review that you can see their econometrics. You can see all of it. Their whole work is exposed to critique by the whole profession. So it's a great tradition that we have. And what this particular piece of work did is it went after measuring trade policy uncertainty through a couple of channels, including concerning tariffs, also concerning the threat of more tariffs, and it looked deeply at the data to try to assess the effects on output. And while I would say, directly answering your question, there's real uncertainty around these effects. It's a $22 trillion economy. To try to isolate the effects of certain things is very challenging, but we do the best we can. So, and this piece of research found significant effects, and that's frankly consistent with a number of other research projects that economists have undertaken. It's also consistent with what we've been hearing in the Beige Book. So, I think if you take a step back from that, we do feel that trade uncertainty is having an effect. You see it in weak business investment, weak exports. Hard to quantify it precisely, though.